After the failure of Silicon Valley Bank and Signature Bank in the US, First Republic Bank's shares have now plunged to a record low after the lender announced that depositors withdrew more than $100 billion, prompting fears of further bank collapses. Now, First Republic stock closed down nearly 15% on Tuesday after the San Francisco-based lender disclosed that it lost almost 40% of its deposits in the first quarter of the banking sector, as the entire banking sector suffered overall its biggest crises of confidence since 2007 and 8, which is when the big financial crash happened. First Republic there, of course, and its shares plunging after. And on the back of that news, with me at this point in time in the studio is my colleague Karthik Malhotra. Karthik, what exactly has led to this sort of depositors withdrawing a lot of money? We understand this comes on the back of major banks collapsing in the US. What's the future looking like for First Republic?
So, Shweta, it's important to understand that First Republic Bank, unlike, let's say, Silicon Valley Bank, is known for its wealth management. It is known as a bank, unlike Silicon Valley Bank, where all the startups and all the big tech park their money. First Republic actually caters to the affluent Americans. It caters to the high net worth individuals living in the US. And the bank largely caters to these HNIs and helps manage their wealth by investing it in various asset classes. Now, the data that has come out of $100 billion worth of withdrawals, this comes again in the aftermath of the bank run that we saw in the month of March. The data got announced only today, and it's for the quarter of Jan, Feb and March, with a major chunk of this 100 billion actually happening in the month of March itself, in the aftermath of the bank collapses. Now, First Republic was incidentally the third bank in the US after SVB and Citizen First, which actually went and sort of realized that it has trouble on its books. And thereafter, it received a fairly handsome $30 billion package from the US and a couple of consortium of other banks pooled together in a bid to rescue this bank. And after that infusion, fresh capital infusion happened, it became a systemically important bank as well, which means it pretty much falls in the global category of too big to fail. Okay. Now, this $100 billion has obviously spooked investors tremendously. And while First Republic lost almost 50%, 49% at end of trading session early this morning, India time, Tuesday, US time, we saw that even other bank indices and other bank stocks have gone downward. So, there's an overall spiral down. Okay. So, the fears, when one thought that the worst is behind us, apparently it's not. So, those fears have resurfaced. Now, two important points which are coming through this headline today. Number one being that now looking at its books, and to sort of not be a bad bank, so to speak, now looking at its books, Bloomberg has just reported that First Republic Bank could divest up to 50 billion to 100 billion worth of assets from its books. So, it wants to become asset light. The second unfortunate report coming out is that they will look at operational efficiency, which pretty much means they are going to slash maybe 20 to 25% of its headcount.
All right. There was a fear of contagion effect after First Republic, Silicon Valley Bank, Signature Bank. Do you see that contagion spreading further? What's the future looking like for banking sector in the US? Is the worst over?
That's $1 million question which everybody is grappling to find the answer to. And we all thought that UBS took over Credit Suisse, so Europe was taken care of, and we saw that Silicon Valley Bank and the mess that sort of the bank run that happened was all over. But this $100 billion is obviously a big figure, and it's difficult to predict whether the worst is over or we will see a fresh round of withdrawals across the banking sector in the US, and that obviously will have a greater implication on the US economy as a whole. Okay,
before I let you go, or we move on rather from this story, what's the impact on India bank?
Next to nil, I would say, because even during the banking crisis at its peak in the month of March, which started around the 8th, 9th of March and carried on pretty much for the whole month, we did not see any ripple effect on India. Okay. I think the only fear was that the Indian IT sector, which caters to US banks through its its services that it offers could take a little bit of beating. We've seen banking results also, they've been slight underperformers, but overall I think the IT stocks and IT sector earnings have been okay. So I doubt there's going to be a direct impact on India, but yeah, it will have a direct impact on the US economy, and that could again result in Fed tinkering rates and all of that, and that may have an indirect impact on India.